everybody, it's Ken again, and I'm here once again with my good friend Russ Gray.
Hey, Kenny.
What's going on, man?
I am excited to be here in the McElroy studios. It's always a good hang with you.
You know, I think everybody wants to know, like, what's going to break in 2024? Like, what do you see? What's your crystal ball?
Yeah, well, I don't think it's any secret that there are pressures building up in the economy and in the financial system. And a lot of it is driven, it's not really the cause as much as it's kind of the next symptom in the parade. Way back when COVID broke and they did the lockdowns, and you were part of this, we did a 4-part series and we had a thesis that we were going to go through a 4-part cascading crisis. We were going to have a health crisis, which was going to lead to an economic crisis because of the lockdowns, which would lead to a financial system crisis, would eventually lead to a currency crisis. And so it's like watching a slow motion train wreck. It's been a few years, but the thing that really threw a monkey wrench in everything is the amount of money and stimulus they put in during the lockdowns had a ripple effect or a counter effect, and that was inflation. And then the response to inflation was in a very aggressive interest rate hike. And you know probably better than anybody else what happens when they do that.
I know they put a lot of money into the economy. That what it did was it kind of accelerated everything.
Yeah, well, what happens is inflation is an indication the currency is failing. It takes more of the same currency, or it takes more of the currency to buy the same stuff. And so when people recognize that the currency is failing, depending on their level of sophistication and where they are in the food chain, they begin to react to it.
Gresham's law.
Yeah, and so Main Street and people who are forward-thinking are like, hey, I need to get out of this currency. Some people went to gold, and a lot of people are believers in gold, and gold has had a pretty good run. A lot of people went into cryptocurrency as kind of the new thing, the digital gold, they call it, just a way to escape the U.S. dollar. At the sovereign nation level, Russia and China began working on a global de-dollarization push, and then that spread into their influence in BRICS, Brazil, Russia, India, China, South Africa, that just had a big meeting in May and added another 5 or 6 members. Now they call it the BRICS 11. And they've been busy putting in a lot of infrastructure in order to be able to get off the dollar globally. And so there are many, many, many things that are all going on in what I call the macrosphere that all roll down to Main Street. And we feel it at the gas pump. We feel it in our mortgage rates. We feel it in our real wages and whether a tenant can accept an increase or not, whether there's jobs on Main Street, whether small businesses can expand or they have to contract. All of those things that happen up there roll down to Main Street. And then that's what we're just beginning to see that. And it's coming to a head. And I think 2024, at least from the folks we were hanging out with at New Orleans, are saying 2024 is a year where some things are probably going to start.
Let's talk about, the dollar. It's kind of the world's reserve currency, as many people know. Some people may not. But if Russia is selling oil to somebody else, it's actually traded in dollars, right?
Well, it has been. That's one of the things that's been changing. So to take a little trip down memory lane and look at the history, the British pound was the world's reserve currency heading into World War II.
Yep.
And after World War II, we came out of that, and at a meeting held in Bretton Woods, New Hampshire, they came up with the Bretton Woods Agreement, and the U.S. dollar was established as the world's reserve currency, and it was redeemable by foreigners for gold. So if you had dollars as a Frenchman, let's say, you could bring those to the U.S., and the U.S. would give you gold. So it was a gold-backed currency, and that system existed until 1971. In August 15th, 1971, Richard Nixon broke that gold standard because we were hemorrhaging gold. We printed too many dollars. And Charles de Gaulle in France called us out on it in the mid-60s, and the world started draining our gold reserves from over 20,000 tons down to 8. And when you look at the chart, you could see we were going broke. And so we just defaulted to get in front of it. It's like declaring bankruptcy. And the result of that was the dollar collapse. Nobody wanted the dollar because it was no longer redeemable. Oil prices went way up. Gold prices went way up. This was in the 70s, and economic activity came to a standstill. Last time I was with you, we talked about what stagflation is.
Right.
And that's where that first happened. And stagflation is what happens when the currency collapses. Well, interestingly enough, for the first time since then, in these last couple of years, you've been hearing this word stagflation come back up again.
Yep.
And that's a hint that the currency, in fact, is failing. And the people around the world are sophisticated enough to recognize that. Now, in the mid-'70s, after the dollar collapsed, the European Union, European Union didn't exist. They went to work on creating the European Union because they felt like if they could band together the European states or nations, the way the individual states in America had been formed into the United States, and they could create a currency, they would have a currency that would be competitive with the dollar on the world stage. Well, it took from the 70s until 1999 to get that currency released, but today it's got about 20% of market share. Dollar's still the dominant currency, but it took a big bite.
Germany was the leading economic power of the European Union, and now it's dead last. And the euro has actually gone down in value, just like the dollar, almost 85% since I think it was 99.
Yeah.
So they're not happy because their dollar is doing the same thing as our dollar.
Yeah. Well, I mean, and there's a lesson there too, because the Mario Draghi was their equivalent to our, let's see, who's the chair, Jerome Powell.
Right.
Right. Back then it was like Ben Bernanke and Mario Draghi. And they were all very interested in weakening the dollar. Yeah, we will print as much as it takes. So we print currency, we buy bonds from the government, from the countries, and then the money goes through the governments and is spent into the economy, and that creates inflation. It's a weakening of the dollar or the weakening of the currency. And so the same thing happened there. It's the same thing that happened in Japan. Japan was desperately trying to get inflation, and just like we were desperately trying to get inflation, and then pretty soon it's like you push, all of a sudden you break through, and then you've got all this momentum, and you get way more inflation than you anticipated. Yeah. And so the response to that is to raise interest rates.
Correct.
And to crush purchasing power. So prices are established supply and demand.
I don't think people really understand it because I know we've raised it 11 times. Over there, they raised it 14.
Yeah. And it's brutal in multiple ways because the entire premise is we're going to crush purchasing power, which really means we're going to take the individual who's out there trying to spend money and buy things for their family and enjoy life. We're going to make it harder for them. Yeah. So it's very hard on Main Street. It's also very hard on the banking system because banks are, and many other organizations, life insurance companies, other people, pension funds, they hold bonds, and bonds of long duration are very sensitive to interest rate movements. If interest rates drop, the value of the bond, just like a real estate, cap rates drop, apartment values go up, right? If yields drop or interest rates drop, bond prices go up, but the reverse is true.
They're down 50%.
That's right. And so if your capital is based on the valuation of the bonds and you're a bank, that's what happened to Silicon Valley Bank.
You got it.
You're insolvent.
Right.
And then when the banking system starts to collapse, what happens is lending stops. And then it makes it very difficult on Main Street once again, because the way the system works is savers consume more than they produce. They take the savings and put it in the bank, and the bank has that capital formation. They loan that excess capital to people who are going to make investments and grow the economy. And when all of that breaks, the economy slows down, and that's kind of what they're after. And it's a balancing act, because if these balance sheets completely implode, like they did with Bear Stearns and Lehman Brothers back in 2008, this is the tightrope. Either we're going to have inflation or we're going to break the financial system. And that's when I said, when we talked about the 4-phase cascading crisis, the financial system breaks when the economic activity, the bonds begin to go bad, right? If you lock down the economy, people can't do debt service. You fire it back up, and now you've got inflation, so you raise interest rates. Either way, you break the bond market. When that happens, then you've got to decide, how am I going to fix a broken financial system? And if we end up going back to stimulus when we still have inflation, then you get, I don't know, I'm going to call it hyperinflation, but you get aggressive inflation.
What can somebody do moving forward? Where should they look? And where are you shining the light? Where are the opportunities? Because there's always opportunities with, like, as Robert Kiyosaki said, that there's two sides to a coin, and then there's the third, which is the edge. Can you stand on the edge and look at both?
Sure. Yeah. Well, the flip side of every problem is an opportunity.
Yeah.
And so the more problems that exist in the marketplace, the more opportunities there are going to be for people who can come up with solutions. And so you see right now entrepreneurs are dealing with an affordable housing issue.
Yep.
So you got tiny homes. That's been a growth area. You have areas that are more affordable, rural areas or less expensive areas. Those are areas that are seeing migration, lower tax areas. So if you understand what the migration patterns are going to be, you can get in front of it. Pad split has come up. And this is where you're creating super affordable housing by working out a little kind of a loophole, I guess. You know, you you form a private membership association, and so now we're related parties, and so we can all live in a house together, and it's 8 bedrooms and 2 baths, and it's a couple $100 a week or something, and so it's very profitable for the investor who owns a house because it's cash flows, but it's also very affordable for the tenants. And so capitalism always finds a way to meet the needs and an exchange of value. If you got a problem and I bring a solution, then you're willing to share some of your production with me in order to buy that solution. So I can make money in that situation. I think that you know, to me, you want to pay attention to, you want to be in things that are real,
yes,
that are essential, and that are affordable. You have to recognize that people are probably going to become poorer before they become richer. There's going to continue to be a bigger gap between the people who have money and the people who don't. And I'm not saying I like it. I'm not saying it should be that way. And we could talk about, well, what could we do to fix it? But since I don't sit in a position of power and the people who do aren't calling me going, hey, Russ, you know, what do you think we should do? It doesn't really matter. We have to deal with what is. And what is people have higher expenses. They have lower real wages. Their wages might be going up, but their expenses are going up faster. That's going to force them to make moves and make decisions. They're going to eliminate some things that are discretionary. They're going to probably do staycations as opposed to vacations. They're going to move to more affordable areas. They're going to be looking for side hustles. There's going to be a lot of things that are going to happen in the economy that if you are paying attention as an entrepreneur, you can put yourself in a position to be the beneficiary of. So I think there's going to be a lot of opportunity, and there already is.
If you take a look at your core basic needs, housing, food, energy, those are things that are healthcare, yes. Those are things that are not going to go away, right?
Right. Exactly. And the thing, I mean, I totally agree with you on the idea that inflation is going to be super sticky, that interest rates are probably going to remain high. And the challenge is going to be, part of the reason is because you got a government that's spending a ton of money. And so when the government spends a ton of money, they have to be aggressive in taxation. And we've seen the government begin to make moves in being more aggressive in collections of taxation. So when you have more taxes, when you have more regulation, when you have higher interest costs, when you have higher energy costs, forget just the printing of money. Just adding more costs to the doing of business is going to push prices up. Well, and the wild card, I mean, the thing that's going on right now that is so different than the 70s is we were the undisputed superpower. There was Russia, but they didn't have great economic output. They had a big army, but they did not have the economic output. You look at what's going on with this BRICS alliance. The BRICS are bigger than the G7. So the Western countries got together. They have a G20, the top 20 biggest economies, and a subset of that is called the G7. And you look at the BRICS, which is 6 countries, and then now this BRICS 11, you start putting those together, and in terms of population, production, energy consumption, energy production, they equal or exceed the United States. The European Union never got bigger than the United States, but right now this BRICS alliance is actually bigger than the United States and then the European Union in third. So I hear people talk all the time about, oh, China won't do this, China can't do that. I don't think China's the issue. I think it's the coalition of these countries that are all eager to de-dollarize and get out of being dependent upon the dollar. And so this is really, I think, a lot of what drives geopolitics is control over gold, control over energy, and then defending the dominance of the currency. If for some reason the U.S. were to lose or significantly be reduced as the world's reserve currency, for Americans, that's going to be very, very, very difficult.